It is the end of the quarter, and I want us to finish 2025 strong. And so I'm popping on to share a few things that crossed my mind. I want us to take this time to take a close look at all of our finances in order to see is there anything that we can turn around and get on track before the end of 2025. Starting with our retirement accounts. When was the last time you really took a good look at those and evaluated the performance, made sure you have a handle of all of your retirement accounts from previous jobs? If you're like me, you may have not had the story of just working at the same company for the last 15, 20, 25, 30 years. I've been laid off a few times. And so each time I'm left with that 401k balance that I have to then take charge of. So I pulled these couple of points from an article to share with you. Investors are advised to check their portfolio. These points depend on what type of person you are. I'm able to look at my portfolios every day. I don't get stressed because I incorporate the news and everything that is going on with what I'm seeing in my portfolio. And if the performance and what's going on in the economy is not lining up, then that shows me that I might have to make an adjustment to that underperforming investment within my account. But let's take a look at these points. Investors are advised not to check their portfolio too often because it can lead to impulsive decisions based on short term market performance. Like I just explained, that is not a struggle for me. You need to take a look, though, to make sure that the performance, the fees, everything is in line with your goals. And if you don't have goals set, you need to sit down and figure out what is the standard that you want for your investments. And so once you've reviewed it, any changes should be carefully considered, of course. Another thing I wanted to talk about that you might be able to make improvements to before year end is, do you have an emergency fund? We always hear these statistics about people don't have enough for $1,000 emergency, but I just pulled this detail. Americans who have no savings in 2025, you know what bracket you're falling in. Do you have one paycheck put aside in a high yield savings account for an emergency? Do you have $1,000 put aside? Those could be two starting points if you're not there already. If you've ever been thrown off track by an unexpected expense, I want that to be your main focus. Even if you have to review your budget, review your spending, whatever amount you can send over to your savings account without touching and let it build up until you're able to hit one of those two amounts that I mentioned, one paycheck or $1,000 as a starting point if you're not there already. If you already have more than that, then evaluate and see, do you feel like you have sufficient savings to hold you over if you do get laid off, if you do have a more expensive expense that comes up? The goal is not to run into debt, that high interest credit card debt especially. So now I'm going to share a story. Please feel free to drop me any comments, questions of anything that you would like me to share about my own personal finances, portfolios. Now it's story time. I posted this in the Discord a few weeks ago. I turned around my IRA with a $54,000 gain. No additional contributions, just strategy. I had a struggling IRA over at Empowerment. I moved it to Fidelity. This was about 25, 26 months ago now. My starting balance was 122,000. As of the time that I was sharing this post, I was at 176,000, about a 44% increase. I didn't add any money to this. I just reinvested what I already had because I knew that my money was not working for me. It was underperforming. The fees were too high over at Empowerment. So I was sitting here the other day and I decided to put some information and let AI help me tell you guys this story. If I had left this money at Empowerment in that particular fund that I was invested into, it estimated that I would have $131,000 and would have gained about $8,600 over that time span since I moved it. But I look down here at the notes and it says that they did not take into consideration the dividends. And so I asked them to go back and redo it, making sure to include those dividends. And it's saying with the dividends, I would have been at about 132,800. Okay. So then I said, how much fees would I have paid during this time frame? The fund that I was in had an expense ratio of 0.96%, nearly 1%. I'm always trying to stress that 1% sounds small, but you have to think about it on $120,000, 500,000, a million. It's very significant. So those fees over that about 25-month time frame would have added up to about $2,370. And so this is where I would have been at. That 122,000 would have grown to 132,000, a gain of about 10,000, and that $2,370 is baked into this number already. Now, I moved a majority of that money into Fidelity's S&P 500 fund, FXAIX. It has an expense ratio of 0.015. That's $1.50 for every $10,000 invested. And so over about 2 years, that 25-month time span, I spent $38 in fees. This is a look at my Fidelity balances. On August 29th, 2023, when I got started, I was at 122,007. And September 26th, 2025, I'm at 180,000. If I would have stayed in that fund over at Empowerment, like I showed you, I would have been at about $132,000. I was already there in 5 months after getting started investing over at Fidelity. I'm sure within that 5-month time span, I hadn't even gotten a lot of my money invested yet because I invested that $120,000 over time. So that particular IRA that I created from that sum of money is predominantly into the S&P 500. I'm up 46%. And then I have two individual stocks in there also. And I'm up 51% and 52% when it comes to those. And so overall, as of today, that portfolio, I've grown it by 46%. Don't want this video to be too long, but the blue line is the fund that I was in, and the orange line is the fund that I moved a majority of that money to. If you have old retirement investments, make sure you have a handle on the performance. Get them moving. Don't sit around and lose tens of thousands of dollars like I was. Feel free to drop me any comments, questions, and let me know if I can help you with funds that you have a concern that might be underperforming in your portfolio. Get a handle of all the investment choices that you have when it comes to your retirement. Just because you're defaulted into a particular target date fund, there may be other better options when it comes to those expenses as well as the performance. Okay, bye.